Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monty, Senior Technical Analyst with Market Rebellion, and this is a one-year daily candle chart of IWM. As I zoom in here, you'll see that I left my zip line down here. That was from the Wednesday midweek report, where after we hit these targets back here, I drew that zip line lower, saying that we would most likely go a little bit lower into Friday with that downside target of 177.10. That's exactly what's happened. And now that we hit that target, let's look into next week. So if you take out your trading checklist, I do this quite often with our members, we're simply looking at the buy signals versus the sell signals and how they stack up on the chart. And this green little body candle there is known as a spinning top. That's usually found at pivot points. So that's considered to be a bullish candle because we see this wide divergence from that 20 period moving average. It's known as the rubber band effect. That is bullish. We see a very, very slight drop in volume here from these red candles on the way down. That's telling us that the sellers are losing momentum. That's bullish. And if you look down below, we have an oversold condition on the CCI with a positive divergence and a slight hinge on the stochastics. That is also oversold and seen as a bullish candle. Now we have a gap above the market here, which is most likely going to act as a price magnet. And 80% of the time when you see gaps above the market, you'll see that they'll fill. And then that gap fill point usually becomes resistance. So we'll have to keep an eye on that. Remember that we are coming into what's historically known as the Santa Claus rally, aka the year-end rally. And I just want to highlight this for you because we have a closed market the day after Christmas right here on the 26th. And the year-end rally consists of the last 5 trading days of the year and the first 2 trading days of the new year. So it's only a 7-day window, but we're getting this stretched out here because we have this end of year holiday congestion, more or less, with those 3-day weekends back to back. Now, I've told people this over and over again, you should never try to jump the gun on the year-end rally because as you can see here, if you had bought because you thought the Fed was going to again push the prices higher in the market, you would have been terribly wrong because even now if we get that 1.4% Santa Claus rally like we've historically seen, you would still be down on that particular trade. So I tell people to hold off on that. However, with the signals looking more bullish than bearish, I think there's still going to be some folks that are going to try to jump the gun on the year-end rally. Therefore, I think we're going to go just a little bit higher on IWM. So I'm putting that upside target of 176.53, and then we'll have to adjust to see whether or not we get that pullback from that point. Now, looking at QQQ, we have also hit my downside targets that have been here for a while. Remember, way back when here, I drew the zip line up, said we would move up. That whole area up here acted as a resistance level, and then we pulled back from it. We never did hit that downside target right away, but obviously yesterday we did do that, and we hit that downside target. So this is pretty much the same scenario. I'm going to remove those zip lines there and then draw my new forecast for next week. Like IWM, I think we could still go higher, but because of the increase in volume, we might see a little bit of a head fake on Monday with the Qs dropping just a little bit to test this gap fill support level down there. Then I do believe that we're going to roll up in the tech sector with an attempt to try to fill this gap. So the Qs are more or less caught between 2 gaps. And if I back up here, you'll see that we still are in a very significant downward trend. There's no doubt about it. We have lower highs. We have had lower lows here, here, and here. And I am expecting a new low to come out in the first quarter of 2023. So our option traders who are positioned correctly with these put spreads are doing extremely well on the Qs and right across the board with the major markets. Now, if I look at DIA, we also had a big sell-off this week. Obviously, we came very close to hitting this target price here, and that is most likely going to act as a support level, as we see back here was support. So I'm going to erase that. That's close enough to count as a hit. And so this is very similar to a spinning top, but it's also very closely relating to a doji. Those two also are found at pivot points, and with the indicators showing down below here oversold, we do have a positive divergence on the stochastics, and the CCI is starting to hinge right there. So I think, again, like what we saw in the Qs, I think because of the increase in volume, we could go a little bit lower, and then I think we're going to move into a short-term rally as we close up 2022. So that's DIA. If I look at the spiders, you're going to see here we did hit the target again and then exceeded it just by a hair. We gapped down today and we gapped down yesterday. So now we have two gaps with the open gap below the market acting as a key support level. How does that work? Well, from the high of that candle all the way across, you can see that we do have a gap fill on that. 80% of the time gaps fill, and then 80% of the time after they fill, they tend to reverse. So I'm going upside with the SPY at 388.26. Same scenario with the oscillators. Got that positive divergence on the stochastics, extremely oversold condition on the CCI, gaps above the market, wide divergence from that moving average, pulling that stock up to that moving averages known as the rubber band effect. Now, interestingly enough, we had very little activity on the VIX, and this is extremely interesting because with the amount of movement we had to the downside this week, you would think that the VIX would have screamed higher. Now, yesterday we came very close to showing a bullish harami right there, and the VIX is starting to pivot up on these momentum oscillators. I think next week early on, the VIX could drop a little bit and then start to move up. I'm going to keep this upside target in place, but I just want to put a note on this chart here that we could see a pivot point right at that moving average early next week. And so if we do get a year-end rally, this VIX may drop just a little bit more, but it's hard to forecast that when it's acting so erratically. Again, that's not normally what you see on the VIX right there. So now I want to get to some geopolitical news here. First and foremost, this will most likely affect the markets because, as I've been talking about for months, as interest rates start to move higher, you're going to see that these pensions are very much in jeopardy as they are leveraged in derivatives. And I think that could be an extremely big story as these pensions start to roll over. Biden came out and more or less committed the $36 billion to aid these pensions, just like he started giving commitments to college students to pay that tuition. The problem with this is that this is unconstitutional. See, Congress is the only body in our government that controls the purse strings. So this is going to run up the courts and probably get into a legal battle and most likely lose because it is unconstitutional. So that is, again, putting the pensions at risk. If they're not able to get any bailouts and interest rates continue to go higher like the Fed was talking, then this could be very interesting because we're already starting to see this in Europe unfold. Now, Bank of America, this is one that came out this week where they're projecting that Brent crude could top $90 per barrel on a Fed pivot. And so this is something that could very well start to bring inflation back. Don't believe that inflation is over. It's not. The recession is full speed ahead. No one wants to talk about it, but the fact is, by definition, if you have a shrinking GDP, that's a recession. And with the oil and energy stocks also projected to go higher, you're going to see that weather is going to have an impact on that as well. So I say keep your eye on the National Weather Service, because if we get severe cold snaps here or storms that come through, that tends to be bullish, as well as bullish for, like commodities like orange juice. In Florida next weekend, we're expected to get down into the 20s. And that weather news is already factored into commodity prices, but it does affect oil prices as well. So it's something to think about as you're moving forward and investing in energy. This is one of the biggest stories that are not being talked about. And as I mentioned last week, President Xi here has gone to the Gulf nations, met with them, and this just came out recently on December 9th, where China now is going to be using the Shanghai Exchange to purchase oil using their yuan for the energy deals. Now, If this happens, and I do believe it will, this could very well be the end of the petrodollar. If that happens and the US dollar loses its status as the reserve currency, then you're going to see the dollar plummet, and it's going to be very, very quick. You're going to see our markets crash very quickly. So keep this in mind. This is why, I tell people, go hunt for the news. This is not something I'm speculating on. This is what I'm hunting for. I'm looking for this. Reuters is putting this out. Not too many other news channels are. But keep an eye on that, because as soon as they make that announcement, it's going to be goodbye dollar. Keep an eye on that. Now, Elon Musk has been in the news quite a bit, but this came out right before Powell came out with their announcement. And what he means by this, by using the word amplify, he said that if the U.S. Federal Reserve rate hike comes out, which it did at 50 basis points, it will amplify the recession. In other words, an amplified recession or an extremely long recession is also known as a depression. I think he refrained from using that word depression, but amplified recession is the same thing. And I do tend to agree with Elon Musk on that one. I don't necessarily agree with him on everything. I don't even know if I could trust Elon Musk. I know that sounds terrible. I don't know the man, but I see a lot of things happening that just causes me to scratch my head and go, what kind of decision was that? But anyway, he is a businessman. He knows what he's doing. He is the richest man in the world. I think he knows a little bit about the economies and how they work. And you can see that will also affect his Tesla shares as well. So I'm sure he's concerned about that. This came out through Bloomberg. It's one of the best overlay charts I've seen in a long time. I just want to take a moment here to explain what this is. Now, this blue line is the current S&P, absent of what we had this week. So in other words, this blue line is more elongated down here, like that. And what they did is they basically took the median bear market activity and overlaid it on top of the current S&P bear market. And the red line is suggesting that if the bear market continues with a recession, which is what we're expecting, we're going to be seeing much lower prices here. If we continue into the bear market, which I do believe we're going to see, but we don't have a recession, then we're still going to wind up with lower highs than what we've seen. And so either way, we're going to wind up with lower prices at the end of the year. But I tend to believe that the recession is going to be deep, it's going to be long, and it's going to take its toll on the market. So that's why we are positioned with bear market strategies that are working extremely well. Again, if there's any members that want to comment in the comment field below, go right ahead. We're having a field day out there with making money and collecting cash. Now, if you're brand new and you want to learn more about how to trade spreads like this, I would say just go contact Market Rebellion and get in with one of their programs. Their representatives there are very good. They're very professional, not going to press you. Just ask questions and they'll help you out there. Now, this again is leading us to more evidence about what a recession might look like. Air travel demand is on a slowdown here. So Delta Airlines is really one of the latest carriers to warn about the slumping travel demand. That's usually what you see in recession. People cut back on their spending and their travel. And so that's something to keep an eye on as you look at the markets. You can look at, ticker symbol DAL, American Airlines, United Airlines. You can look at Southwest, ticker symbol LUV. Keep an eye on those. And those are actually good leading indicators as to what the economy is doing. Now, finally, before I wrap things up, I just don't even know what to say about this because Philadelphia Fed admits that their jobs were overstated. Check this out, by 1.1 million. I mean, there is a huge differential here. This is a big mishap. 1.1 million jobs is not something that, oh, by the way, I just forgot about to put that extra number in there. No, this is a big deal. The jobs numbers were overstated, and therefore things are looking a lot worse in the jobs market than what was originally put out. I think it's a good idea for you to really take anything that's being said here with a grain of salt and keep your eye on the charts because there's nothing better than a candle chart, in my opinion, because it's already factoring in the news, the economic data, and according to Charles Dow, that is all discounted according to his tenets of Dow theory. So I want to thank you very much. If you're interested, again, in Market Rebellion, just go to marketrebellion.com, click on the link, send them an email, and I will see you on the next market report. Take care. Bye-bye.
As traders, We are beholden to forces greater than any one person. Forces that can lift spirits or leave scars. There are those who passively resign to their fate, leave their decisions to others, and let the chips fall where they may. And then there are the rebels, a battle-tested team of expert technical analysts, astute educators, tactical momentum traders, crypto connoisseurs, and the select few who take the market head-on so that they may have a say in their own destiny. Guided by the mantra, discipline dictates action. Discipline dictates action. Discipline dictates action. Today, we rebels gather, a community of mavericks, forging a path through the ups and downs on our own terms. Welcome to the rebellion.